The broadcast is now starting. All attendees are in listen-only mode.
Test, test. Can you hear me now? There we go. Good, good. Well, good morning. Sorry about the little glitch there. It is great to be here. It's 4 o'clock where I'm at. I did this session because most people may think they have an excuse not to be here, but most people are in bed sleeping right now. So if you want to do what it takes to get it done, we can be here at 4 or 5 o'clock in the morning, 6 a.m. on the East Coast. We got a handful of people in today. Where are you guys from? We got people cheating coming in from the UK and Aussies. It's the middle of your day, right? Gary.
To the webinar, you have entered as an attendee in listen-only mode.
Matt, were you losing audio? Is everybody else doing okay? I'm showing green bars. Okay. Yeah, so I thought I was a self-development guy until I met Steve, and he kind of changed my outlook on what self-development really is, and has really opened me up to some of the different the way the brain works, and really that's really opened me up to further my training. As he says, self-development's 85 to 90% the head game of what's going on here. What we look at on the charts actually becomes secondary after a while. So, hey, good morning, Zoe. Better late than never. So with that said, let's put up this disclaimer slide here. Hold on one second. Just getting used to this a little bit. So of course, as we know, as disruptive traders, there is risk warning and trading disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors or traders. There are no guarantees of profit, and most Forex traders lose money trading. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of expertise, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should only invest money that you can afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from independent financial advisor if you have any doubts or uncertainties. This presentation and all of its contents, including past trades and potential trade setups, is for educational and informational purpose only. Using any strategies, techniques, or software mentioned in this presentation is also risky. We make no guarantee of profit of any kind. The presenter is not a licensed financial professional and therefore will not give any financial advice or recommendations. All information in this presentation is our opinion and may not reflect the truth or reality in the world of trading. Please use your own good judgment and seek advice from a qualified consultant before believing, accepting, and acting upon any information in this presentation. This is not a solicitation to invest. In all caps, hypothetical performance results have many inherent limitations, some of which are described below. No representation is being made that any account will or is likely to achieve profits or performance results, and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in the program. In spite of trading losses are material points which can also adversely affect actual trading results. Almost done. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in the preparation of hypothetical performance results, and all of which can adversely affect actual trading results. So I am glad you hung with me on that. Steve has asked us to put that up every time. Obviously, we know why. When we talk back to Charlie Delta trading, there's so many advantages to it. And I think the biggest one is when we look at the biggest part of trading is figuring out what you want to trade and what works with your lifestyle. And the Charlie Delta trading is, to me, brings trades to you. And that's the biggest thing. In the time I've spent learning is just, well, where do I find a trade? And you have FOMO and you're like, I need to trade. And Charlie Delta is point blank as easy as you can get, especially when you couple it with tab 29 or fast 33, and the trades come to you and you're able to trap those trades. And Steve has always said, be a trapper and don't be out searching for your trades. And so when we'll set a few of them up today, but usually when you do a CDX fork or an XA, you're going to get 2 to 5 trades off of that going forward, which is very powerful. And there's so much Fibonacci-ness in the scan. And so bar none, it's the highest percentage turnaround point on the chart. It's going to give you good trades. You're going to get pips off of them done properly. And they're just so easy. A third grader could draw a CDX fork. And their new paradigm. A pitchfork is real time. When we draw a pitchfork and it bounces off of that, we're not, there's no lag there. There's no, waiting for it to turn around. So this one here I like the 15-minute chart, and the majority of the scans that I do are 15-minute. And I think the biggest advantage of it is you still have long enough moves to get a good trade. I'll do some 5-minute stuff, but a lot of times your 5-minute waves are only 5 to 7 pips before it turns around if it's not a longer run. Where a 15-minute, even if it's a shorter run, is going to turn around in 10 pips, 12 pips, somewhere in that field. So you can do biggers 30, 1 hour, but I prefer to do the 15-minute if possible. This one here is a euro. There's actually a lot of, so this is the harmonic pattern scanner. If you don't have it, this thing is the bomb. And you can go to forexharmonicpatterns.com, which is actually, full disclosure, is a referral link for Steve. Makes a few dollars a month off of it. It helps pay for some of the programming costs for all the indicators that he gives us. But this one is a 15-minute, and we're on the harmonic pattern scanner. They do such a good job with the scanner because they're constantly evolving it. They're putting more and more things in there to make it better for us. And it's actually, it's got machine learning in it. So you'll notice like that X point is not a real high and low like we like to see, a real swing high, swing low. This D kind of slid up a little bit, so we would take it here. We would move our fork up to the top. But the fact that the scanner will look for, put this down here. The scanner will look for a true swing high, swing low first, and if it can't find it, it will take it midpoint like the X there. And Steve wasn't real big on that originally, but then he, is kind of warmed up to it, and he knows, by talking with the developers that, they're looking for that swing high, swing low if they can get it. But if not, there's still a pattern in there. So just taking the X's off, could be slightly moved. That's a good question. So Liam had a question. In this case, should we use the X or the previous swing high? This one here kind of jacked me with the data, so we don't see the previous. That's one where you can set 2 forks if you want, and kind of see how it plays out, or which one's doing better. Sometimes it's a big difference. Sometimes the fork won't fit. It'll be upside. It'll be pointing up instead of pointing down in this case. But the other advantage of the CDX forks is we get to play Andrew's observations. And if you've been through the pitchfork course, you know that we have a 50% chance of making it, to the median line of the pitchfork from the D. Here we slid just a little bit. That's the other nice thing is we don't trade the D. so we don't have to worry about the D sliding on us. When the D sets, if we go here, we bounce us around a little bit, slush, and then when the D comes back up, we catch this nice, depending on how we enter the trade, we could potentially catch this nice down pull here, but we're not trading the D, so we don't need to worry about that. We're looking to hit this if it is real close. If we were going to a higher here, we might have had something a little bit more in there. Before the session, I was looking at some different forks here, and there wasn't a lot of great ones actually. So with the harmonic pattern scanner, we're able to set up a watch list, and I've been trading the pairs that are on the EA economy wedges, just kind of that way you're looking at the same stuff all the time. And I have this set up to do, I look at 15:30 in an hour. Usually I'm looking to trade the 13 or the 15, but sometimes you won't have what you want there, so you look at a 30 or 1 hour. Bats, alternative bats, crab, Gartley. I do drop the triangles in there. I don't usually look at the sharks. And then right now I just have it set up to look at the D point. So these are all of our scans that are on here. We've had some runaways on us where this one actually didn't look too bad. So as we know, or if we're just getting started, a Charlie Delta pitchfork consists of the X point, the C point, and the D point. Again, there's no interpretation. X, C, D. If we get one where it's upside down, it's pointing the wrong way, we just don't set a fork on it. We move to the next one. So here we've got this one actually looks like it's got some good potential here. When I set my forks, I'll leave the 50% fibbo on. If it's a bigger fork, you can do 25 even, the ox basically, but a lot of times this will come up and it'll bounce off the 50%. I'm not generally looking to trade that right away, but it just gives you an idea why it's changing direction there. So this one's a pretty good, it's just getting going. Again, we're not trading the D. So we would be looking to, if we get a bounce off here, we're looking to trap trade. So if I come in here, we can put we'll make it a little thinner. Oops. We'd put an alert here. We'll drag this over to TradingView, but we'd put an alert here, and we'd put an alert up here. And so anytime price would come up and interact with the median, which we have a 50% chance of getting to on this swing high, swing low, traditional pitchfork, which means we are anchored to this point. Again, whoops. Liam had asked you could look at it like this as well, but I do like to stick with the scanner. It's proven itself to be very accurate over time. Was that X in here? Let's see here. It was right there. All right, so the trick to this comes down to one word. And it's something that I think it takes everybody a little time to learn in the Forex, some longer than others, but it's patience. Because the trades will come to you. And if you set your alerts with your TradingView charts, you can get an email, you can get a text, you can get a SMS, uh, direct, the app does a direct push to your phone. And to me right away, it seemed almost counterintuitive that, when this is, let's say the price pulls up a little bit here and then it comes back to the outer parallel here. And this, if we set an alert here, it's gonna go off on our phone, and I'll show you on TradingView, we'll do it. It's gonna go off on our phone, and when price comes down here, we have a standard pitchfork trade, and we'll look at it on TradingView as well with Fast 33. But right now we have nothing to do here. We could potentially, with experience, you could potentially trade this line here if it was to turn around. But you're waiting for price to come here or price to go there. And so it's what we call a trade setup, right? We've set up our traps. Price comes here. When it crosses this line, we get an alert. And then when it bounces off, if it bounces off this line, we would trade that as a buy. As a pitchfork going up, we're looking to trade buys in an upward facing pitchfork, bouncing off the median. We'd probably take that trade as well with experience. So we just kind of sit on this, and we go to the next pair and take a look at it. Does that make sense, Gary? Here's another good example of where the D point kind of slid on us, right? There's a lot of these that one's kind of a high, I guess, but let's see. This one here, if you're looking, so the other fork we'll set is an XA fork, but this one, XA, and we like to swing it to the C or the D, but the D, it might give us a fork there actually. I'm going to take that off for right now just so it doesn't get too busy. All right, so here we can see where the original CD would be right here. And it's funny because you get interaction with them. You can kind of see where, it slid up, but then it hit that 50%. So a lot of times, if you're working with forks, you can set another fork that was an original CD before it slid. But the cleanest is just to, per Steve's experience, if you will, 15 years, 16 years, is to take this, move it up. It gives us the true C, swing low to swing high in this instance. So again, this actually isn't setting up too bad either. The Swissie's been making some fairly good moves the last couple of days, but it's moving down. So we have a 50% chance of getting to here. And a lot of times what we'll see is it'll come down about yay far, and then it'll pull back, it's wave 2 pullback, and it'll bounce off of the upper parallel and then take off again. That's a very strong move and something that we're looking to trap. So all right, let's take this one and let's actually move it to a TradingView chart. So I'm going to take this and move it over here. Let's do this. All right, so if you have multiple screens, this is a lot easier to do. But what we like to do is actually move the scan to a TradingView chart. So we've got on the left here, this is your harmonic pattern tool. And we are looking at, I'm going to turn the magnet on here. This one's kind of a weird, A is way, All right, so we're going to play it like that. And then we'll put our pitchfork on there. Try to keep 15-minute pitchfork. So you know, for color continuity, usually use the orange or burnt orange. Here we get a pretty good view of what's going on. And so I've got tab 29 and fast 33 on my chart. So we can see that if we're just a fast 33 trader, we had a harmonic wave convergence at that D. If we're tab 29, we see that it was looks like a 240, kind of dirty, but we'll take it. And we're busting out of there. So now we want to say, okay, what can we get out of this in the future? Or, you know, yeah, it would have been nice to get that, but it went up, it went down. Let's get something that's solid. So if we come over here and we do a trend line, we're on a 15-minute chart, so it doesn't, you know, 15-minute line runs for quite a while. We're going to do it here. All right, so then I'm about 4 pips away, 15-minute. Unless you get a fast-moving candle, that's usually not 4 or 5 pips. And so if we right-click it, we can actually add an alert on that trend line. So crossing trend line, and then we'll put another one down here. All right, so now if we look at that, anytime price gets to the median right here, or the upper parallel right here, we're going to get an alert. I have mine set up to come to my computer. I don't do the email alerts because I'm at my computer the majority of the day. What's neat about this, and like I said, I leave the 50% line in. Your stronger trades are going to be on the upper parallel and the medians. And it's nice to be able to get in one trade and make your pips for the day or several days. Again, you know, for all income claims, go to www.tradingdisclaimers.com. But this, again, is a patience game. And it's something that once you do it enough, you see that it works. And that you don't have to chase trades all over the map. You don't have to take bad trades. When this comes down to hit here or pulls back up to hit here, more than likely it's going to be, if it's not a 15-minute convergence, it's going to be a 5-minute convergence. If we go, you know, if we're looking at it on a 5-minute chart, you know, we can already see on tab 29 we're in a 10-minute here. You know, so it's, when this turns back up, you know, if we were bouncing off of here, it'd be awesome. That'd be a great trade. Let's see, we got a few questions here. Yeah, Liam, setting traps. When I first started out, I'm like, yeah, whatever. Steve's lit. And then you learn better. Steve's not lit. He's lit, but in a good way. So he knows what he's doing. One of the big reasons he does it is just from a time, he does his setups. When an alert goes off, he knows he has something to look at. He looks at it, he moves on, he works on other things in his day. Good point, Zoe, you're right. I said it was a 50% chance to get to the median. Actually, it is an 80% chance to get to the median. Good clarification there. Yes, Liam, because the fork is pointing down, we would be looking to do sells, but a lot of it has to do with the steepness of the fork. If you look, you know, if this fork is really, really steep, and this one's like, I like the steepness of this fork for a sell, because when you come up here and bounce, as you're going back down, it makes for a good sell because you want to stay inside the fork and the median's running away from you. So you're gaining pips as you're running that 80% chance to get to the median. But if it's not overly steep, so if you take a trade here, a buy on this, if it bounced, you have to think, well, yeah, it could retest that median, it could come up and come right back to it and test it and then take off. So you have to be careful about if your fork is steep like this or more, then a buy here becomes a little bit dicier, because if it comes up and retests it, all of a sudden you're -2, -3, and really that you're giving the trade room to breathe, but it's putting you in a negative position. And as a new paradigm trader, we try to keep the math on our side, not against us. We're not in there with a 25 pip stop where, oh yeah, we'll just let it slush around in there. So that's why in this, our best trades are going to be up here. They're going to be in this downward facing fork. Our best trades are going to be in the sell positions. Pat, to answer your question, yes, you're looking for bounces on the main fork line. So let me take this line out. So you've got the median here, upper parallel and lower parallel. So we're waiting for price to interact with one of those three lines. And then because this is a traditional fork, it is valid to trade on the first bounce. So traditional meaning we've anchored it to an X point, a swing high, and then we went from swing low to swing high. So swing low to swing high, back to a swing high. If we've had this as a best fit fork where we decide over time, we may decide, and we'll look at some of these as time goes on, hey, if we wiggle this a little bit, things are really lining up nicely. We're not on the X anymore. At that point, we've got to have 2 hits, and then we can trade the third. And ideally, we'd like to see an inside and an outside hit, and then we can trade from there. Put this back on the X. There we go. So this one here, getting real close to giving me an alert, which will pop up on my screen once it does. And I'm 29, 3 pips away. If I'm live on the charts, I'll set them a little tighter. If I know that I'm going to walk away, if you're trading 3 or 4 pairs, you can keep a pretty close eye on your alerts. Ideally, we want this to come down, create a wick, touch this line, and then pull back. We'll see, we may get some action right here. Right here live. So let's go back to the scanner and see what we have there. Anything else? The other thing, the one other point I want to make also is when you set your forks, 2 schools of thought is, set them per time period. Let's move. But if we look, the actual high was right there. If we come down to the 1, if you use the magnet tool, it'll get you close. But if you come down to the 1-minute chart, you can put it on the actual high and actual low. And I like to do that because it gets you to me, I think it gets you a better representation, especially if you're in a longer time frame, but 15, they're usually really close, the 15-minute time frame. All right. Well, yes. Some people say, well, on time period, it's, the fork is proper if you set, to set it on the wicks. And it's funny because then when you go to the actual 1-minute chart, it's not the wick. The X is usually right, which is funny. That's usually a good sized wick. But again, when we're talking back to Andrew's observation, so Andrew is the one that initially came up with the pitchfork on the charts and studied it. And what he observed is when you came away from a D point, you had, if you take all the different types of patterns, you have 89%. He didn't observe this, but you have 89% chance of coming 15% down of the C to D move. So let's say this was 100 pips, which it's not, but just using round math, that it would move 15 pips. We don't chase the D, so that's not really a big deal for us. But we know that, other than we know there's a good chance it's going to move that far. What we like to see is that there's an 80% chance it's going to make it to the median. Now, on occasion, that'll happen in this one move. It could happen right here before on this session. Again, I actually prefer that it doesn't on the first move. I would rather see a retrace or for price to pull down and then come back to the upper parallel, hit it, give me a trade, and then, hey, heck yeah, we're still on that 80%. And to me, that's the strongest trade, in my opinion, of CDX trading, of the Charlie Delta. And as you do more and more of them, you'll be able to you'll know which ones, when they hit here, have a real good chance of bouncing hard. Sometimes this will come down and it'll turn around and just blow right through the fork, which is fine. We can slide, at that point, if it comes up a little bit, we'll just move our fork up. We're back in the game again with a new one. And then we'll look at a couple where it just ran away. And on those, you just let them keep running, move on to the next. That's the beauty of the scanner, is it brings us, anywhere from probably 6 to 15 different patterns a day to work with. So yeah, exactly, Zoe. We want to bounce so we can trade. Again, it's patience. When you first get on the charts, you're like, oh, I need to be in a trade. I need to be trading. And then you figure out, no, I need a good trade. So let's bring this back over here. We looked at that already. So the GU is kind of setting up the same, where it's got good possibility. Again, we'd love to see it here, especially if we can get that in a nice FIBO value. Let's see what the UJ had. Oh, yeah. This is just, as Steve would always say, a third grader could, where is that? Third grader could do this, could draw this fork. I mean, that's a nice steepness to it. Yeah, we'll talk possible money managements in the future. We have to take it with a grain of salt just because we're not financial advisors. But if we look at this, there might have been a Newsweek here. a lot of times even just saying, hey, I have an 80% chance of getting from here to this line. If I can just stay in the fork, when a fork is this steep, I'm making pips. If I get if let's say we got 107.77, right now where price is, we did hit the median, but where price is right now, it's almost 30 pips higher than the D, this wick aside, just by staying in the fork. So it's one of the ways. But once you get to that median, you're usually going to get, Andrew's observations say that when you bounce off the median, you have a good probability of coming back to the lower parallel if you're moving up, or it may come down, plunge through, and if you do that, then you're looking to go to the upper parallel. This is actually a 30-minute fork too. So the other fork that we'll draw is actually an XA. And when we do an XA, usually ends up being a best fit, which means we need to get 2 bounces and then we can trade the third. And we like to either set it off the C point. So we wiggle the tail here, and we want it to be the XA. In this case, we were swing low to swing high, so we're going to be pointing down. Or we can go off the D point, but in this case we can't because it actually makes the fork swing up, even though we have lots of touches. And you'll see that, but it's not a valid fork. So from a trading standpoint, it's not a fork that you would want to use. The C is always kind of tricky. Here we can kind of go C and we're getting D median touch. Yes, this is a little bit wicky. The UJ has been like this for the last day, but so you can see here, if we set it on the C, the D was actually the median of that fork. And the beauty of this is that with this scanner is that we had the C, if I was running notifications, I would have got a notification right here after the second candle. So if I came in and said, hey, let me draw an XA fork, because I got a notification that, there's could be a potential D point down here, and I set it, I would have been pretty close. Again, there's a little bit of interpretation because these two lines are so close. So you never quite know where it is, but it's a nice little bounce there. So a lot of times what happens let's find one where it ran away on us. UCAD did, I think. It's just moving up, but this would be a good XA. Here's the reason that we use XA. That's traditional. We didn't hit the C there. If we drag up the C, let's see, it gets pretty steep. Let's see, we go right here, like now. So you got to think early on, if you get a C alert, you're not to the D yet. If we're using just D alerts, then we have the D. Take that. So a lot of it depends on what alerts you're running and when you get that alert as to what you're going to get out of it. So this one that went up, the XA, we actually had a little pass and check right here, real close, depending on where that D point is. Let me move this box up. It's pretty good. So this, I'm going to move that out of the way just so we can see here. So this is a fork we can leave on our charts. If we look the D, we basically drag it up to here. And the C is way back here. So that fork's getting kind of big. It's getting kind of stretched out. The XA is probably going to have more validity over time on this one. but we would need, we wouldn't trade this because, as Doug pointed out, it's not the third hit. We did come up and get one here. That one's on the top. Personally, myself, as this played out, I would look for traditional here. And then we're still in the fork at that point. Just it's what Steve would call is not the cleanest setup. That's why I love a good CD, where this turned around and left right here. You go CDX, come back, it hits the upper parallel, and away you go. The cleaner, the better. Again, back to head game. They're out there. When you first start, it doesn't seem like it. Seems like 15-minute forks take forever. Just not that I was going through them before the session, and sometimes you'll sit down and there'll be a half a dozen of them that are just all just like awesome. And today's weren't the best, but that's how it goes. I was just going to set this on the actual and see what. So this one here, in real time, we'll see that it made a D in the zone that they called, turned around and hit the median. Just making sure I'm on my points pretty tight. Yeah. So it was a 80, 16 pip move. Not a big fork, but a great move. Then it came up and went back out of our fork. With a good solid move like that where it comes to the median, I'll usually leave this and then put warning lines on the fork. Hey, Tim, reading my mind. Because we know we had a D that turned around and it made the median. To me, that's, it did its 15% as a scan, but it also did the median. So we can see the 1.5. This is a 1.5 warning line, was a hit. 2.0 kind of played around there. And you can see once it finally decided to turn around and start going down, here's where it almost made the median, pulled up, and then it just plunged through. And you'll see that quite a bit with pitchforks. And here we're at the bottom lower parallel, and it played with it. It kind of did a little pass and check here, and then took off again. So the point here, or the learning point here, is you don't have to be where the D is live. In fact, sometimes being back a little bit, and I've gone back a couple days in history here, gives you even better data. If we came in and we're right here and we're drawing this fork, that's a good fork. You know that something's going to interact with it going down the way here. Even better if it came up and bounced off right here, as I said, but it's definitely going to have some interaction. So don't be afraid to go back in the notifications. 15-minute fork, day and a half, even 3 days. This one an XA might work on it. But as Tim pointed out, the warning lines, the CD forks are just so strong because of all the Fibonacci involved in getting, this X, A, B, C, D. Each one of these is a ratio relative to each other. And so by the time you get to D, price has been moving in a, Fibo is kind of a relation to real people. It's what creates the charts, right? It's human nature. But it's been moving in that pattern. It's almost like it's marching along, and it has a higher probability of being consistent and doing things consistently, I should say. This is one of those kind of inside. It's not the best pattern. It'd be nice if this was a CD move here. So Yeah, Gary, like a heartbeat. It's Josh Casey, who's one of our new coaches also. He said when he's watching candlesticks on the chart, it's like watching human nature in live real time. So Tim Packus brought up a good point, which Tim's been around for longer than I have. You can do reverse forks, and this one's probably not the best example. I'll do one on trading. It's easier to check your compliance as well. Yeah, Tim's a dinosaur. uh, let's see. Let's look at this one while we're at it. So I always get a kick out of this because it seems like when you set these, and people have done this before, when you set your alert lines, they somehow end up being these awesome trend line bounces with no verification. All right, so reverse fork, right? So if we take this and we spin it around, we can take a lot of times, and more so on a CDX, because Steve tries to take the trader head game, make it easy, right? CDX, XA, either touching the C or the D. What that does is it takes these types of interpretation out of the game, if you will. And so as a trader, when you're having to make decisions, I'm going to remove this line here. You don't trade like a robot as easily. So if we look here, we could go here. We've got some touches. The median's not the best. We've got some wedge lines up there from before. It's not really anything that's lighting me on fire. Yeah, it's not my friend. That one doesn't look the best. Sometimes you'll reverse, especially on like an XA, you'll reverse it and you'll have 3, 4 hits, 5 hits, and it just looks awesome. And what it does, that reverse compliance says those essentially you're shooting trend lines into the past, and so they have a good probability of moving into the future. The advantage of especially a traditional pitchfork is we can trade the first bounce. So it's, in this case, 1 point, 2 points, where if I trade quite a few trend lines also. It's what I do if I have CDXs set when I'm not, when I'm waiting for a trade, I'll trade trend lines, but it takes that third hit. And a lot of times, if I had a pitchfork set, I'd be catching it on that second hit in a traditional pitchfork. So how do you reverse back once you're happy with it without rotating it back? So that's a good question. Whoops, let's take that out. So let's say it's right there is where we want it. What I usually do is if you set a trend line here on the parallels, your magnet tool's on, like that. So that's saying, okay, here's the channel, the price channel. So let's take this, then you flip it around and you set it on those. So you've taken this previous price channel and projected it out into the future. So, and like Zoe said, you could draw a second fork also. So leave the one there, draw one, swing high, swing low from that, and point it down. I think the biggest thing, and I've said it a couple times already, is just doing a volume of trades, building KSP, right? Knowledge of system performance. Of all the things we do, CDX forks are probably have the least interpretation in them. We'll get into going forward, looking at, the actual trade itself, the bounce off of it tonight. I just wanted to, or this morning, I should say, just kind of get started. It's my first session also. Just wanted to, kind of get my feet wet a little bit and go through some of the basics of it, which in future sessions we'll touch on the basics real quick and then move forward from there. But it's that lack of interpretation where we're looking at this and we're like, hey, right now our head's thanks, Tim, our head's like totally relaxed. Yeah, we're getting close to the median line, but I'm not trying to say, hey, if I'm a tab 29 trader, if we have a few in here, wow, this is getting close to, it looks like it might be a retraced extreme. That 30's coming down. Well, I don't have to do any of that. Just sit and wait. It's like kind of like stalking the grizzly. And once he's right in position, then you're ready. You're ready to strike. So, and the other thing, like I said earlier, with the 15-minute charts, is the moves that you get on the chart are a nice move. It's not something that you're going to have to get in, get out right away. Usually, especially bouncing off of a median line, it's something that's worthwhile. So, John, welcome, John. What time frame is typically best to draw the CDX forks? You can do 5 minute. I like 15. If a 30 scan comes up, I'll take the 30 scan and trade it. Ideally, if you're doing a scan on a 30, you're usually going to find 30-minute convergences. Occasionally it'll be a 15, but usually going to be a 30-minute convergence. The 5-minute scans, you can make pips on them. There are more of them. So if we go to chart here, you can actually go to the pair and look and say, okay, let's see. Hit a previous on here. So not showing that. I get a kick out of that when it gives you that. That's a little small. Let's see what we got there. 21, 27. Yeah. You'll get some really nice ones on a 5-minute scan. If it's only 5 or 6 pips, although if you look at this, the CD played out quite nicely. But to me, on a 5, you want, 10, 15 pip, 20 pip scan. This one's pretty small. You just have to, the size of the wave on a 5-minute move is going to be smaller. So when price pulls away, it's going to be, when price comes away or you trade a bounce, it's going to go a lesser distance in general before it has the first retrace that may or may not take you out of the trade depending on your money management. And the overall length of that move is potentially less. The 5 minutes is just a piece inside of a 15-minute or a 30-minute. And so you have to keep that in mind. And although there's more of them, it's a little bit trickier to get in and out of them and make adequate pips. It's one of the reasons that in the different things that we do, Steve kind of, he advocates for either 10-minute or 15-minute. because when you get in one, you can get in it and there's enough bursts that if our indicators say, hey, it's not the right time to be in, you can get out and still be PIP positive as opposed to having to take a loss. So, Pat, yes, and we'll get into that more in next week's session, but generally 2-pip pullback, we like to use, either FAST 33 or tab 29 as a confirmation indicator as well, knowing that, hey, we're at a 15-minute convergence or a 10-minute convergence. So we know that, we're going to get some pop, coming out of this trade. Hold on one second, I'm going to take a drink of water. Can you hear me? Test, test. Okay. Yeah, so there wasn't a lot on the charts this morning. Not a lot of great scans. It's funny because this scanner, NZD. This scanner doesn't put as many scans out as some of the other ones that I've used, a couple other ones I've used. But the scans that it does put out are generally pretty good. So they filter some of them out. And when you don't put the sharks in there, it helps as well. I mean, look at that. 15-minute scan. I had to have some woo-woo today, right? I'm going to leave the warning lines on there. You see how it just pulled out and went right down, pulled up a little bit and took off again. So came all the way down here. Did a little, if you guys have been looking at wedges at all, we got a little wedge or consolidation pattern here. Pretty much bounced off the lower parallel there, and away it went again. So it's good stuff. It's something that we haven't spent a lot of time on recently, but I know Steve still uses and has in his arsenal. Bottom line, it's pitchforks, and it's the highest probability pitchforks. You don't have to go looking for them. They're given to you. Makes your head game easier, and they make pips. And you will get 2 to 5 trades off of this. If you leave them on your charts, it may be a week from now, and all of a sudden price comes back up and tags that median. And we'll look to in future sessions at creating energy points, different ways to create energy points that really give us a higher probability as far as stacking probabilities to get the trade that we want. John, yes, the green lines are they were generated by the scanner, and what they do is they go back into history and look at lines that were strong support and resistance. Couldn't tell you in real time if the green line at the bottom of that bounce was there or not because we weren't here. And Steve has in the INS 2.0 that he gave away, you have the ability to put these lines in. They update frequently. It's hard to keep up with them on a 5-minute. It's almost impossible. But like a 15-minute or a 30-minute, they're good lines. Or you can just take them and say, hey, these bottom 2 lines are in play for me. Let me take them and drop them on my TradingView chart, and just take that value and put it on your on the chart that you're working with. So let's see. Mention it. That was one of the things I had, John, was to mention the S&R lines. Do we have any other questions? If not, I think I'm going to wrap up for the day. And then tomorrow morning, I will be doing a session also. And tomorrow morning, we're going to work with the 62, which I do. You probably noticed it on my charts. This gets a little bit busy with everything on here, but this is the 30-minute 62, and then we've got the 15-62. And I've been spending a lot of time with the 62, so that'll be some fun stuff. And the cool thing is with the 62 trading is it just adds more. If you notice here, like it's running right through the middle of the CDX fork. When we get the 62 crossing, they're like the 15, which is the local, the 15-minute 62 crosses that 30-minute, you'll usually get a burst, which we got there. So we've got a bunch of things for that tomorrow. We'll get into that tomorrow. Thanks, everybody. Thanks, Tim. Really appreciate you guys getting up early, except for everybody that cheated. At the same time, it's nice to have a few sessions where the Aussies and the Brits don't have to burn the candle to check it out. So we will put this up as for replay also, and it was a lot of fun. I look forward to it. The only other thing I can say, guys, is we spent a lot of time on the charts here, but when it all boils down to it, it's head game and getting your head right, reading your books. I think probably Joe Dispenza, some of the stuff that he puts out on. I'm a science guy too because I'm a math guy, and he gives you the science behind it, how to program your brain, and to not do it is being silly. I mean, we have the tools, the knowledge is out there. What we know about the brain now compared to what we knew 4, 5, 6 years ago, and there are ways to do it where once this is subconscious. I mean, think about it. It's like you get up in the morning, you make your coffee, drive to work, never open your eyes hardly. Once your trading's like that, it's, that's when it becomes magical. And Steve has taught about that. If you haven't watched a trader physiology video for a while, go back through it. It's 2 hours long, but even if you're just putting it in the background. So take the time. Take the time. I luckily am blessed to be able to spend a couple hours a day uninterrupted on that. My daughter's 15, unless I'm getting her to swim or jujitsu. I have the time to do it. And so for me to not do it's, even more of a, bad on me, but I enjoy it. And I'm really starting to feel that, Steve always says the person you become in becoming a successful trader. And I think this will be a big part of it as well. I really enjoy helping people. If you have questions that weren't clarified here, feel free to post them in the groups. And I'm in the groups, tag me if you want, and we'll get those questions answered. That way that the other people in the group benefit from it also. So, Gary, maybe I'm not as old as I thought, Gary. So, but that's all for now. I'm going to sign off. Have a blessed day and gratitude. The first slide I had up is, what are you grateful for today? So if we don't give gratitude, it's the magnet that makes it all work. So grateful for you guys and taking the time to be here. And we'll see you again soon. Bye.